I'm Mike Bredner, and this is Capital Views, and we have with us Angela Rodell, who's the Commissioner of Revenue. And welcome, Angela, and let's talk about the governor's proposal to put $3 billion aside to the benefit of the pension shortfalls. Sure.
You know, the governor looked at the unfunded liability that exists within PERS and TERS, and we're looking at an unfunded liability of almost $12 billion sitting here today. And PERS and TERS has an asset allocation that is designed to achieve an 8% target, but obviously markets move, things change, and it hasn't been able to always achieve that 8%. Demographics maybe didn't work out the way they were forecasted back in the day, and so we have this shortfall. The $3 billion would come out of the Constitutional Budget Reserve Fund, and the Constitutional Budget Reserve Fund has over $10 billion on balance sitting with it. In fact, it's closer to $11 billion. And that money is invested in two separate asset allocations. We have a sub account and a main account. And the main account is earning less than 1% right now. And in fact, it's taking some losses as interest rates go up and bonds lose their value on the mark-to-market.
And that's because of less, the bond market is going down and some of these things, and you're confined to a more conservative investment.
Exactly, because it is a budget reserve fund, and so it has a different risk profile than the long-term 30-year PERS and TERS asset allocations. So by moving this money over, it will allow that money to be invested at a different asset allocation. But not only that, what it's going to do in the near term is to provide budgetary relief in terms of the annual required contributions that are made each year. And if you think about how we forward fund some obligations of the state, this would be a forward funding of some future years' contribution requirements, or at least a partial contribution requirement that's needed to be made, and thereby providing some operating relief.
So this $3 billion is invested at a higher performance, on a higher performance basis, and that's going to pay the PERS and TERS contribution rates. And there's a difference between, you know, what it's got arbitrage. It's going to earn a profit that retires the portion of the liability. Am I right?
That is correct. It'll help diminish the unfunded liability, and it will provide income to the PERS and TERS with which we pay the retirees their benefits. But importantly, what it's going to allow us to do is to cut back on the required contribution that we make each year out of the operating budget. So if we look to next year as to what we would need out of the operating budget, we would need in excess of $700 million. This will allow us to basically pre-fund $250 million of that.
Now, there's a contribution which both teachers and management makes from the districts. Let's take schools, for instance. And that will still exist, and it'll go into the fund as a normal payment. And we sort of held that harmless because they couldn't afford to pay the higher rate. So, but the additional is going to come from the fund instead of this investment fund.
Correct. A portion of it is going to come from this investment from the Constitutional Budget Reserve Fund into the PERS and TERS trust funds.
Now, in theory, depending on this $3 billion will still exist. It's the earnings portfolio that comes off of it. I mean, it's in a different place, but it's over there. And it maintains itself. I mean, it's sort of inflation-proof. Does that? Could be?
No, I mean it's going to withstand the same potential losses that the other $23 billion is invested, but it's going to be invested in the same asset allocations as that $23 billion that currently exists, and so the earnings are going to replenish and feed into that fund and grow the balance for investment. If there are significant losses, like there was in 2009, that $3 billion will be affected by that, as the other principal corpus would be affected.
Well, in perspective, I mean, we went through two hits. We went through .com, tried to repair it, Then we went through the 2008-2009 slide, which every fund of every kind, whether it was Harvard or the permanent fund, everybody experienced that decline.
That's correct. And in fact, the Constitutional Budget Reserve took a large hit as well in the 2009, and we have more than made up for and exceeded earnings in that fund. And the sub-account, which is invested in equities, is in excess of $6 billion now. So the Constitutional Budget Reserve continues to perform very well. We think that there's an opportunity here, looking forward, financial planning for the state to create some budgetary relief while also truly investing in the future of Alaska.
Now we're going to be running out of time, but we have other reserve assets sitting around the budget. We have the statutory budget reserve. We're still forward funding schools a year
That's
in
correct.
advance. So if the sky fell, we would fund schools who are already funded for a future year.
That's correct.
What else exists?
So there's really, there's a, between the statutory budget reserve and the constitutional budget reserve, we're at about $17 billion in reserve. If you think about where the unrestricted general fund budget is, we're around $6.5 billion in unrestricted. So there's a significant coverage there. And that's really the lion's share of the savings accounts. There's other funds funding programs like power cost equalization or public school trust, but those aren't considered savings accounts.
Angela, we're out of time, and it's been a pleasure. I'm Mike Bradner. This is Capital Views, and we've been talking to Angela Rodell, the Commissioner of Revenue.